In its farm income forecast last week, the USDA said receipts from corn sales in 2017 were expected to drop for the fifth consecutive year. The obvious question for many farmers likely becomes, when will prices recover? Economists at the University of Illinois are studying that topic by looking at the predictability of crop price cycles. They believe corn, soybean, and wheat prices have had three distinct periods since 1947. In those periods, the researchers see prices move within a range, then revert back to an average price. However, Scott Irwin, one of those University of Illinois ag economists, notes the average price of a period isn't really known until the period ends. We talked with Scott recently to learn how producers could use this research in their marketing plans, but we first asked him to describe the distinct long-run periods of crop price cycles.
The periods that I call eras of grain prices run from post-World War II to 1973, and then from 73 to 2006, and 2006 to the present. And what we have found to date is that grain prices, unadjusted for inflation, tend to move in a range during these eras. And if you're at high prices in the range, you'll tend to revert back to the average. And if you're at low prices, you'll tend to slowly at some point crawl back up towards the average. And that seems to be the pattern. Now, why do we apparently move in such reasonably defined ranges over so many decades until there's a big jump in the average price? No real good answers for that. My own personal view is it just reflects relatively stable supply and demand dynamics. You're talking about generally food commodity markets. They don't change that rapidly. Who's producing them, who's consuming them. So as long as economic growth is not, wildly high or low, we'll tend to bounce around in a range.
Describe the characteristics of the current time period. So when it began, where you think the average price might be?
We don't have the benefit of 30 or 35 years of hindsight like we, had looking back from 73 to 2006. But it's pretty clear that a new era started in 2006, and we saw a major jump in the average price level. To date, here in Illinois, corn prices, for example, have averaged about $4.50 since 2006. Now, of course, the last 4 years, prices have been much lower. On average, probably something like $3.50. I'm not sure exactly what that average would be for the last 4 years in Illinois, but that'd probably be pretty close. And prices have ranged from roughly $3 to $8 a bushel.
So should you be less aggressive marketing at these prices?
Well, it all depends on your belief. If you believe conventional wisdom, you should prepare and project low $3, sub $3.50 corn prices, basically as far as the eye can see. That is not my view. I will be the first to admit that prices have gone lower longer than I expected when we came off the highs, but I still believe that a projection of an average price for the next 5 years closer to $4 than $3.25 or $3.50 is more realistic.
Given your thoughts then, Scott, where do you think prices will be over the next 5 or so years here, and how do you think that relates to land prices?
Excellent question. For corn, I would use a U.S. average price of $4, for soybeans $10.75, and for all wheat $4.75. Something around those levels is where I think we will end up averaging. Land prices are really interesting. It appears that the people at the margin that are bidding on and determining land values believe my contrarian position on prices. That's at least one way to reconcile the firmness of land values, is that these long-run investors, whether they be farmers or outside investors, are counting on some reversion to averages like that will restore profitability.
If prices are towards the bottom, then what do you think will pull them back up?
Well, I think it will be two things. One that will be slow and one that will be a little bit more violent. The slow factor will be a return to better rates of economic growth around the world and in the U.S. that will largely feed through livestock demand into feed grain and oilseed prices. But the big one, in my opinion, will be a return to a more normal frequency of bad weather in the United States. That makes me sound really doom and gloom, but we've just come off of the best 20 plus year period since 1895 in terms of U.S. Corn Belt weather. And over the next 5-10 years, history says that you wouldn't want to project that we would have such good weather again. And I think it'll be a series in a fairly short period of time of some really poor weather. That'll be the big event that pulls us out.